Start, as always, with a forward-looking statement. We've got a good history of turning forward-looking statements into reality, but that doesn't mean we get to keep doing it. I actually want to point out that Andre and Patrick asked me to speak a little bit about geologic modeling and how that leads to exploration success. And they wanted me to sort of demystify geologic modeling for you a little bit. Some people think it's a very complex process and you have to be a geologist to understand it, but geologists are actually guilty of creating fancy words and concepts to hide the fact that we really don't know very much. But we go out and do our best to find things for our investors. So unfortunately, a geologic model is an idealized and inherently imperfect representation of a geological system that helps you focus understanding. Now, obviously, she's not imperfect, so you're going to have to live with me instead as we go through this journey. So, geologic modeling works at a number of different levels. And when you look at how MAG put our exploration and our business model together from the beginning, we decided to focus on silver, because we believed silver was a very valuable and underutilized, underappreciated commodity, especially back in 2002 when we put the company together. We decided to focus on high-grade district-scale opportunities, high-grade meaning something that would have made money at the silver price when we put the company together, which was less than $4 an ounce. District scale meaning something that could produce a minimum of 10 million ounces of silver for 10 years. When we looked at Mexico, there's two deposit types that will do that for you. One are called epithermal veins, and that's a fancy name for veins that formed fairly close to the surface at the time of mineralization. And carbonate replacement deposits, a type of deposit that is the backbone of the Mexican underground lead, zinc, silver mining industry. These deposits form belts in Mexico, so we recognized that those were the places to explore, and the idea is to understand the geology of those belts so that you can determine where the deposits are and why the deposits form where they do. And then if you understand that, you can try to figure out where there might be more, which is really what exploration is all about. So if you look worldwide, why do you choose Mexico for silver? This is where most of the world's silver occurs, in these belts, and the lion's share of it occurs along the west coast of North America and South America. But historically, the world has produced a little over 44 billion ounces of silver. A quarter of that has come from Mexico. So 25% of all the silver mined in human history comes from Mexico. On top of that, if you look worldwide, there are 14 deposits that have produced more than 1 billion ounces of silver. 8 of them are in Mexico. So not only is Mexico the place with the most silver in the world, it's the place with the most big silver in the world. So from a geologic modeling standpoint, that's the place you want to start. Now, if you look at the ore deposits of Mexico, I hit 2, you see that it's covered with deposits of all kinds. You look at this and you go, how do I make any sense out of this? How do I filter down to where I want to work? So the first thing you do is you pick a deposit type. For example, veins. And that gets rid of about half of them. And from there you can start to look within these deposit types. Some of them are dominated by gold, silver, base metals, things like this. But you can look within them and you can start to recognize that there are trends. You have these linear distributions of deposits that form where they are because of underlying geology. So what you want to do is determine which one of these is the place where you want to work based on the size of the deposit, how hard it is to explore, what the infrastructure and access is like, and then you go to work. Because when you're modeling, just like a city planner is doing when they're modeling, if you're in exploration, you want to focus your efforts on Main Street. You want to be as focused as you can on the biggest, broadest street you can find. You don't want to be over here on some little cul-de-sac. So from a regional geologic modeling standpoint, you're looking for Main Street. Now, when you focus in on Mexico, you realize that there's something that's called the Fresnillo silver trend. And the Fresnillo silver trend has produced over 4 billion ounces of silver. And 4 of the deposits in the Fresnillo district have produced over 1 billion ounces of silver. So half of the billion-ounce deposits that occur in Mexico are in the Fresnillo trend. That's 4 out of the 14 in the world, and this trend alone is responsible for over 10% of all the silver mined in human history. That's a pretty good place to start. So we're starting to narrow our focus down, and that's a geologic model. The other thing to point out is that these deposits, Guanajuato, Zacatecas, Fresnillo, Sombrerete, these deposits cropped out on the surface. They were found within 60 years of the Spanish conquest of Mexico. And virtually no blind deposits have ever been found in Mexico. Now, we have technology and concepts that we can bring to bear now to explore in these areas, and that's exactly what we're doing. So if you're going to go for high-cost exploration through cover, the best thing to do is do it in Main Street, and arguably this is the white line in the middle of Main Street. So you don't need a model. When the vein sticks out of the surface and all you do is go up and walk up to it and say, "Oop, there's the vein, I'll mine this." You don't need a model. But you do need a model if you're getting a little more complicated and you need to understand what you're looking at if erosion didn't happen to get down to the level where you're exploring. So we create this model, or Larry Buchanan created this model, that relates mineralization to a crack in the ground. Hot fluids rise along it, and at a certain point, those fluids boil. And I'm not talking about a pot of water or a kettle on the stove. I'm talking about the kind of boiling that happens when you open a bottle of beer. That pressure release is what causes the metals to deposit. So this is why these things form near the surface. And silver and gold tend to deposit above that boiling level, and the base metals deposit below it. So this is a very simple model, and the thing is that the ore fluids, after they've deposited the stuff we care about, they continue to interact with the rocks, and they do what's called alteration. And alteration creates a series of different minerals that you can recognize as characteristic of being above the zone of mineralization. And at the time of mineralization, there would have been a hot spring field on the surface here, characterized by a lot of clay alteration. And with modern technology, we can take satellite imagery and we can tweak the satellite imagery in such a way that we can see where all these big areas of clay alteration are. This is the Fresnillo trend. You can even see some of the structures that make the Fresnillo trend right through here. And these are big areas of clay alteration, and we decided to focus on this one because it is 5 kilometers from the Fresnillo mine, which is the biggest silver mine in the world. What we recognized when we walked out and looked at that area of clay alteration is that it's clay associated with silica, which is quartz, which is what you expect to find on the surface. And this appears to be what you would expect to find on the surface at the time of mineralization. If you know how these things work, you know that mineralization ought to occur about 350 meters below that. So you put your first drill holes in to try to do that. And very fortunately, we hit on our first drill hole. There's Cerro Proaño, where the Fresnillo district was found in outcrop in 1552. We're 5 kilometers away, standing on top of that same alteration. And here's our first big drill hole, 8 meters of 1,800 grams silver with 3 grams gold and 7% combined lead and zinc. So we've worked on that for the last 8 years, and now it's movie time. Okay, so why is everybody paying so much attention to Mag Silver at the moment? When we were here last spring, our share price was down in this area right here. We're way up here now, while the silver price has gone down and the GDXJ has dropped significantly. So while everybody else has gone down, we've gone up by about 25%. Why is that? And that's because of this deep zone that I just mentioned. The Bonanza Zone, which is what we're building, what that ramp is all about. This is the 600-gram resource that will be one of the world's biggest silver mines for 15 years once it's in production in 2018. But this last year and the year before, we'd done some drilling that identified this deep zone. It was kind of low in silver. It was about 100 grams, still had good gold and base metals. But we didn't know exactly whether we had gotten to the bottom of it. So we decided to put in 4 holes over here, about 100 meters below the nearest drill holes, just to make sure we had closed it off. And it's one of the first major failures we've had on the property, because what happened was our vein went from 7 meters to better than 20 meters wide. We were absolutely amazed. We looked at it. Here's the 4 intercepts, almost 12 meters, 22 meters, 26 meters, 32 meters. These are true widths. Really nice base metal values. We're seeing copper come up, which is just what you expect to see in the roots of the vein. But we've got silver and gold coming back up from below 100 grams to as much as 405 grams, and gold up to 3 grams. This doesn't make sense in terms of our model. So we go back to our model and try to figure out what's going on. This is physically where the holes are with respect to the surface and where we've drilled everything, where we think the boiling level is. We ought to be out of good silver mineralization by this point. So we have to think about, what does this high silver mean? So we got to think about our model. And when we look at the rocks, we see the answer. Here's this dark zones here. That's all the base metal rich material. And then it's cut by these younger quartz veins that are cutting through all of that. And when we look at that closely, we see that it clearly cuts across the dark stuff, but it's very different looking. It doesn't have any base metal minerals in it. It's got silver minerals in it. It's got these little holes that are lined with crystals. This stuff looks very shallow. This looks like the stuff you should expect to see way up here, but we're down here. How do we explain that? So we look around the district, and what we see is that the boiling level in these systems can move up and down over time in different parts of the district. In fact, in parts of the historic parts of the district, they've documented a 450-meter drop in the boiling level between one vein and another. Our interpretation is that what we're seeing is the same kind of drop in the boiling level, but it's stacked within the same vein. So what we think is, below these holes went in right about here, we think about 300 meters below us is the boiling level that this younger stage of mineralization is related to. So using our model, we can come back and we can come up with a logical explanation for what we're seeing in these holes, which explains why the vein is so wide, explains why the precious metals have come back up, and opens up an amazing amount of potential for us. Essentially what happened is this system exploded and boiled again at a much deeper level, and instead of beer, which you would use at shallow levels, obviously with this kind of impact on our resources and grade, we pop champagne for our analogy instead of beer. So this is all coming in this area down here. We put all the geology together, and everything says we think we're actually sitting on top of a major ore fluid upwelling point. We think that the fluids for this whole western part of the district came up in this area. That means we have no idea how good things could get at depth, but we have every reason to believe they will be good. And at this point, I'm going to turn you over to the GQ model for Mag Silver, our chairman, president, CEO, George Paspalas, who's going to talk about Mag's track record over the last few years.
Thanks, Peter. It's GP, not GQ. Good evening, everybody.
Gentlemen's Quarterly?
I won't even try the German. I'm sure my English will be challenging enough for you. Well, unfortunately, I've got no good-looking women in my presentation, or men, no beer or movies or even champagne. I'm going to try and talk to you about how you make money from geological modelling and extremely successful exploration success that someone like Peter has had. We've been focused on high-grade silver discoveries in Mexico since 2003. Our most advanced project, Juanicipio, you've seen the movie, you've heard Peter talk about it. We elected to offer a joint venture to Fresnillo to earn in and earn operatorship on this asset. A very important step in the development of an exploration company is that tricky transition from exploration to production. Different DNA. MAG's a very small company, was challenged with financing in 2003, and hence Fresnillo are the operator. And I'm going to show on the next slide why they're probably the best operators on the planet for this particular asset. I'm running out of time. We have a 100% owned property in Chihuahua, Cinco de Mayo. We're working on land access. I'll just pass through that. The balance sheet's in great shape. We're not 100% funded yet. We need $130 million. We've got a bit over $10 million into it. We've got 80, good for 2 years, but sometime in the next 2 years, we need to add about another $30 or $40 million for the Juanicipio project to be fully funded. Location, location, location. Here's the Juanicipio, and particularly the Valdecañas vein sitting in here in the joint venture, within a 6-kilometre radius of where Fresnillo have built 3 mines in the last 8 years. And you want to talk about a de-risk scenario? Fresnillo have just commissioned the Sacito 2 mill. They're going to be mining the same vein for 3 years before we mine the joint venture ore. So this is a very high value project being brought into production in probably one of the most de-risk scenarios you could get in mining. So a very important value add to this was to make sure you have good relationships with your partner. And there have been some humps in the road with Fresnillo. From 2008, a failed hostile bid. I think a lot of people know all about that. 2013, early 2014, we repaired that relationship. Fresnillo were talking about that publicly. That added $3 onto our stock in the beginning of 2014, took us to a 52-week high, where we then financed 86 million Canadian to break the back of the company. So following geological modelling, a great strategic decision to come in on a joint venture with the right people in the world to build this mine, fixed the relationship. It added a lot of value to us. We do have the highest grade undeveloped silver property in the world. There it is. In a gram per tonne of silver, pure silver basis, just under 600 grams per tonne. But it's a 1 million ounce gold deposit. When you add the equivalents from the gold, 6.5% combined lead zinc, we're just under 1 kilo per tonne of equivalent. It's a long way back, the second highest deposit. High grade, good operator, low mining costs, 90% metallurgical recoveries makes this a very robust project. And here you see on the the left-hand side of the sensitivity analysis, at $10 an ounce of silver, the project doesn't just keep the lights on, it makes good money. It's a 15% after-tax rate of return at $10 silver. At current metal prices, $16, $63 million of free after-tax cash flow to MAG, a 30% IRR. And this is where we're at the moment. This is why our $80 million keeps us in good stead. We're putting down the ramp, we're putting in the ventilation infrastructure. It's about a $7 million per annum spend for the joint venture share for us. It's only when we get into late 2016 we start to order long lead items, etc., that the cash calls will come, and we need to be in a position to be fully funded going into 2017. This is what it looks like in 3D. That's not the new tunnel from Zurich to Zug. That's actually the ramp into the Juanicipio deposit. We talk about Fresnillo as good operators. It's a 5 by 5 metre ramp with a concrete floor. You don't see many on the planet, but you don't see them getting built for $1,500 per linear metre. That compares with anywhere from $2,500 to $4,500 for equivalent elsewhere in the world. We'll get down to the top of the vein by the end of 2016. 2017, we'll get the infrastructure, the lateral developments into the mining stope set up. 2018, for the first time, MAG will have cash flow. Depending on the silver price, it could be a lot of cash flow. So it's a real box ticker, high grade, low risk, good infrastructure in place. And Peter undersold his discovery. Hole number 1 was a discovery hole on this property after Fresnillo had given the ground up. What that means is, since 2003, a lot of drilling around the property has been focused on the 2 veins that were discovered. The property is relatively unexplored. And we've always said there's a potential for more ounces. Some of our really good targets haven't been drilled yet. And we've proved that this year with the discovery of the deep zone up in here. A very important value proposition for MAG, because the world's largest primary silver producer, our partner Fresnillo's, profitability has shifted from their flagship mine up here, Fresnillo, to Sesito 2. Sesito 2 has replaced Fresnillo as the high 40s, low 50% profit generator for Fresnillo. It's the same vein as what we're mining in the joint venture, and I'm not a geologist, but the indications are what we're seeing down here may be a fluid upflow source for this system. Phenomenal value add for us. Lots of analyst coverage up there. I encourage you, if you want to find out more about the company, get a hold of Michael Kerlock, our VP of Investor Relations Communications, myself, or Peter. We're always happy to talk about MAG. Development company, 2 years from cash flow. People who don't understand the asset quality struggle with the valuation, and the shareholder register. A lot of these institutions have been long on us for a while. They are accumulating positions because they want to be there for when we get into cash flow, and they want the bargain basement price now. Strong board, lots of current and previous mining CEOs on the board. Management's awesome, of course. I can't talk too much about them. But the proof's in the pudding, and Peter showed the graph. Here's our stock price performance over the last 12 months, up 11% compared to the silver price, down 16%, and our reference point, the GDXJ, down 40%. At the end of the day, we can tell you how good it is, but markets are efficient. The market spoke. Thank you very much.